Yo, what's up you guys, welcome back to a new video. And in today's video we're going to do the usual weekly market breakdown. We are going to take a look at the Nasdaq, the dollar index, as well as GBP USD, gold, and the Dow Jones from a technical as well as a fundamental perspective. Now, if you're new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you do enjoy the content, please do consider smashing that thumbs up button there as well. But before we jump into the breakdown, I just want to see if there was any request for last week. So first, got here ma'am saying thank you so much. I don't understand market structure. That's good. Can't wait to see your breakdown. Thank you. You're welcome. So you do the same, and I mean, yeah. So on lower time frames, the price action obviously, maintain the same. This I bet will help me look. This is basically what I do on a daily basis. Loophole saying thank you. Tiny Humeri is saying he is telling the truth. You can pause accounts during the sell and buy, but the problem is you have to only one step challenge. That was also a point that was, that came up, back tested and saw this. So down, when was this? This was a year ago. Oh, okay. All right. Okay. So without any further ado, let's go straight into this week's breakdown. Now, the first thing that we obviously need to look at is fundamental information. Now, for those of you that don't know, fundamental information obviously drives the economy, and you should know this as well as any person out there, because we know that the strength of a current economy is dependent of the strength of a country's currency is dependent on how strong their economy is. If you think I'm making this up, go look at USDX and you'll understand what I mean. Now, what that means is we use fundamental data, which gives us an indication of what the strength of a country's economy looks like, because we gather this information to see whether the economy is strong, whether they're weak, whether they South Africa or whatever the case is, right? Now, basically there's certain news events that triggers that contributes the most, like the Nasdaq. You've got Apple, Amazon, Tesla. They contribute the very high portions towards the Nasdaq. If they get if they get impacted negatively, there's normally a higher severity that the Nasdaq could go down more aggressively as opposed to one of the smaller companies, because they contribute a lot more to that. The same goes with the news. There's certain news events that we do look to that does impact the market quite more aggressively. But in any case, so last week we had the consumer confidence that came through, basically where consumer goes, okay, well, we still feel like the dollar is doing good this year, and we still anticipate it to go even do better. It's basically, sorry about that. It basically is what it say that it is. It's the confidence that the consumers have in the current economy situation. And then we've got the JOLTS job openings, which is basically a survey that is conducted. The ADP is also a survey conducted. Then we got the unemployment claims, which is like UIF here in South Africa. So if you lose your job and you go file for unemployment. Then we got the manufacturing purchasing managers index, and then we obviously got the NFP. And we see here that unemployment went up from 3.4% to 3.7%. So now we're sitting with another situation where unemployment has gone up again. Now, if you remember the video that I did last month on the NFP data, I said that there's something was not right about that information, right? Then here we can see it now that the unemployment is actually going up. Now, this is an indication for one thing and one thing only. That means interest rate hikes is going to come once again. They have added more jobs compared to the previous month, so they went from 294k and they were able to add 339, which is higher than anticipated. However, unemployment rate shot through the roof, which is not good. Now, first article here from CNBC obviously says here Dow leaps 700 points on the hot jobs report. Nasdaq notches 6th straight winning week. It says here the Dow Jones surged on Friday for its best day since January as traders cheered a strong jobs report and the passage of a debt ceiling bill that was averts a US default. Basically, the debt ceiling was going to take the index, was going to default the index, and that anticipation was going to hit the stock market with a 45% decline. However, the US got away with that once again. It says here the 30, the Dow jumped 2.1%, the S&P was up 1.4%, and the Nasdaq up 1.07%, reaching the highest level since April in 2022. And I don't think that is going to move any further this week, right? And then if we go over to some news for gold, it says here gold falls as yields gain after US jobs payroll rise. Now, obviously, because of the negative correlation between the index and gold or precious metals, commodities, we obviously expected that move to take place here. It says gold fell on Friday. I don't know, it probably didn't read the Floyd's wet sign. It fell on Friday as more jobs came through. Basically, it says here the fact that the data is a little mixed is going to cancel itself out, where the Fed most likely will be look through the data, follow through with whatever they're planning to doing. And it says here traders priced in a 70% chance that the Fed policy will leave rates unchanged later this month. Now, I'm not going to say I don't agree with the fact that the Feds are not going to change or hike the interest rates or not. But according to my understanding and based off what I know and what I've been doing, normally when unemployment goes up, but that is an indication that inflation is cooling down. I think I made a mistake when I said something earlier. So when the unemployment goes up, it is a good sign. It means that the inflation is coming down. So the Feds are definitely not going to hike rates as aggressively, because this is exactly what it is that they were looking for. Now, if you're new here, that's basically how the market works, right? So the market works as follows. There's a report called the CPI report. The CPI report is used as an indicator to measure inflation in the US. Now, the way inflation impacts the economy is basically when inflation is high, the only way for the Feds to bring down inflation is to hike interest rates. And by hiking interest rates, this hurts consumers' pockets, meaning that they are unable to spend money at companies that are listed on the Nasdaq 100 or on the exchange. As a result of that, these companies are not making any money, and the first point of reference is to get rid of people. So if the economy is not moving, it's not making money, the first people to go would be the people that is employed, because the company is not making money, because people are not spending. So what we see here is an indication that inflation is actually coming to cool down with a 3.7% unemployment rate. Because that's how it works. So this dump is going to take place whether you like it or not. It's just a matter of time when. Now let's go straight with the technical analysis on the index. Just wait for it to load quickly. So firstly, let me just remove the drawing here. So the first thing that we can see here from a weekly perspective is we can obviously see that the market still has the potential to complete this W formation to that right leg, now that we've got positive data for the dollar index. And then also, just on a side note, you guys are more than happy to let me know what your thoughts are in the comments if you've got a different bias on it, right? This is just me sharing my knowledge in terms of what my outlook is going to be for the market this week. So I'm not saying it is going to go that way. I would love for it to go the way that I wanted it to go, but this is not me giving you advice. I'm not giving anybody advice. I'm just sharing my outlook for the week with you guys. So don't get it confused. If you need advice, I suggest you go to the bank and then say you want to like that you're looking for advice, because this is not financial advice. Okay, let me just clear that, because I don't want any confusion. So this is basically where we're going to target the index going into next week. On the daily time frame, what we have over here was a consolidating market. If I still remember, on Friday, there we go. So we had a consolidation market, and not just a consolidation in terms of this sideways moving market. Also had a market that broke above resistance, came back, tested it as support, and we obviously expect that continuation to the upside. And if you take your Fibonacci from the low to the high, you can see the market hit the golden zone, which is the 61.8, and we obviously expect that continuation to the upside. So by all means, I do expect the index to continue higher, hit that level. From there, we monitor price action once again, and then start evaluating the situation. This week, we don't have much news coming through apart from the normal the unemployment claims, which we basically get on a weekly basis. So next up, we've got the Nasdaq. Now the Nasdaq, I do believe, got some clearance here to complete on the weekly time frame to the upside, right? So if you drop down on the weekly time frame, what we have over here was a market that I have been breaking down for you guys week over week, and we could obviously see the market that continued higher. I do expect the Nasdaq to continue a little bit going more into next week, right? Just to continue slightly higher. That would be the main target before we see the Nasdaq actually make a U-turn. Because it's been quite bullish, and we're probably going to go back to pre-pandemic levels potentially, but I don't foresee that happening. That as traders, we have to be reactive and not predictive. Here on the daily time frame, we have that impulse. If you take your Fibonacci from the low to the high, you can see the market never came back to hit the 0.382. Going into next week, I do expect the market to clear that move to the upside and then start this move to the downside for the market to come and test this previous level of resistance that is now acting as a level of support. In fact, I would say, there we go. I wouldn't even bet that. I would just say we can expect this U-turn in the market on Monday. So that is from a daily perspective. GBP USD here on the daily time frame, not so why the internet is so slow, but basically what we got over here, GBP USD, calma. So GBP USD basically had now finally came below this structure that it had created. There's obviously still more room for GU to come lower, to come and test this previous level of the resistance that is now turned support. So we're going to use that as our long-term target level. Then you're on the daily time frame. What do we have over here? So from a daily perspective, it's very clear that we can see the market had just tested and rejected this level of resistance over here, right? But if we come a little bit lower, we can see over here we had a market that printed a level of resistance. The market then broke above resistance back to test it as support. Now the best way to obviously start looking for selling opportunities here is to obviously wait for the market to break below this level of support, and once that support gets broken, it then becomes resistance. In doing so, will the market also give us what's known as a head and shoulders pattern, which is considered a bearish pattern from a technical perspective. And from there, we can expect that continuation to the downside, as we do expect a stronger dollar index based off the most recent jobs report. Gold obviously also broke. We can see here gold had broken below this, and I was obviously anticipating a market that was moving sideways. Now this is obviously the most important level that gold's been holding on to, that we would like to see the market break, but I'm not going to go that far to say that. What I would say is, if you're on lower time frames, you can definitely expect this market to continue lower and hit that level. From there, we'll have to monitor the price action, because what we could potentially see here is we could potentially see gold print what's known as an information to the neckline. Now an information is considered a bearish pattern from a technical perspective, but we obviously have to monitor the price action. The Dow Jones is obviously going to continue with the index as we expect a clearance to the upside, but just to be safe, it's very important that we also look at the current structural levels that we have. For instance, we have the Dow Jones that had just broken. It's still in bearish territory on the weekly. Market broke below support. It's now back to test it as resistance. The market printed a massive impulse. After an impulse, you expect a correction. And the best way to measure this correction is by taking your Fibonacci from the high to the low of the impulse. Now we can see the market was about to hit the 61.8 there as well. Now we obviously expect the clearance to the upside. Go and join the liquidity hunt over there. But because we're in bearish territory, we need to wait for a break above that level before start looking for long opportunities in the market there as well. Now, the best way to approach this is obviously, as you can see over here, the market is currently testing very strong structure. Now, if you have been trading for quite some time, you obviously know this is the worst place to buy. Now, what we have over here is we have a overextended W formation. Now, the best way I would say to approach the situation is quite simple. Okay, it's basically going into next week, just wait for the market to pull back slightly, and then you can start looking for that buying opportunities to the upside for the market to go and complete the overextended W formation. Also, if you take your Fibonacci from the low to the high over here, there is a possibility that the market can come a little bit lower to hit that 50% level before continuing higher as well. As I always say, make sure that you have a set of rules that you do follow. Make sure that you do apply them properly there as well. Guys, that is it from my side. Also, I am going to the dentist tomorrow. Wisdom needs to come out. So if you do not hear from me this week, it's probably because I will be recovering myself. Thank you for your time. And as always, cheers for ears.